tell us a little bit more about yourself?
Absolutely. Yeah. I actually got an engineering degree. So I have a tech background, which is a little strange actually for real estate. But I think it's actually come in handy a lot. I find real estate to be a very analytical industry, and so I think my kind of background in math and tech has really helped. But I actually spent 10 years in digital advertising before this,
Mhm.
and uh, that was actually a super fun industry. That industry was kind of moving from being more print and magazine to online over the 10 years, and found it to be a great place. And I think one thing I learned is I have a lot of passion for kind of being in the industry that's being innovated by tech, which I definitely think real estate is heading in that direction, or is in the middle of it right now. Along the way, my best friend growing up, actually, it's kind of funny story. I was had no plans to get into real estate. Didn't My parents didn't know real estate. This was like 2011. No one wanted to even talk about real estate back then. And my best friend growing up and we were going to a bachelor party in Pittsburgh. And anybody who knows Pennsylvania, we were starting in like York, Pennsylvania, and basically got on the turnpike and drove from the turnpike all the way over to Pittsburgh. Anyone who's done that drive before knows it's not the most exciting drive, and so we had some time to talk. And he kind of kicked off the drive by saying, I've been into this for a while. I think we should like invest in real estate. And it's kind of out of nowhere. And I honestly, I paid a little mind to it at first, and I thought, I don't know, invest in real estate. I never even thought about it. It never even crossed my mind. And I for sure wasn't passionate about it. But I guess by the end of 3 hours, the pitch went like this: basically, hey, if we invest for the long term and use an analytical approach, no matter where the cycles go, because at that point, it turns out we were at a low point in the cycle,
Yeah.
and that's a great time to invest. But we didn't know that, right? I mean, and we've never claimed to be able to predict cycles. Nobody could have seen COVID coming, right? So the pitch was really, instead of trying to, figure out where cycles are, or try to flip homes or anything, let's just
hmm
buy for the long term. Let's buy assets that we feel good that we would want to own in 20 years. And if we do that, come back in 20 years, 30 years, we should own some properties that we'd be excited about. And so the goal was, I'll never forget, the goal was, could we buy one property a year?
mm
And so I said, gosh, that sounds like a lot. And I said, all right, well, let's buy one. Let's see what happens. And
Yeah.
so that kind of kicked off a search for the first property. And things from there, I kind of seem to go like all in on something if I'm going to do it. And I think after buying the first property, I was looking for number two like 2 weeks later. So the buy one a year didn't last very long,
Yeah.
and it quickly became basically what I did. I mean, there was no difference between free time and work time, and it just became learning about real estate, and that eventually led to us
Mm.
starting a property management company, and eventually investing in different kinds of real estate, commercial and residential,
Mm.
and then a few other kind of real estate entities along the way. And yes, learned a lot, and then started a podcast. So, and I feel like I'm, every day I'm learning more and more. You know, so that's kind of the brief background of kind of where we are.
Awesome. Yeah, and there are so many niches in real estate too that you can invest in as many as you want, or just focus on one and still be a profitable endeavor. Yeah.
Yeah, totally. I think one thing we've tried to avoid is doing things just because it seemed to be the slice of the day.
Mhm.
I think we tried to do things that always made sense to us, which it sounds so cliche, but I just,
Mhm.
we never really wanted to follow the masses. We want to just,
Mhm.
invest in and follow principles. And then that has proved to be pretty successful. And I think the other thing we really believe in is community. And so, I am like full-fledged crazy. I've been going through withdrawal here during COVID, but I probably on a monthly basis, I probably go to like 8 meetups a month, like no joke.
Mm.
8 real estate events of some kind, a conference, meetup or whatever.
Mhm.
Most of them are free, by the way, and I've been doing that now for like 7 years. And it's amazing what you learn. I mean, not everyone's great. Some are a complete waste of time. And other times you meet people that literally change your life. And
Mm.
maybe I'll tell some of the stories on the way here tonight. But I
Yeah.
think that's like been a huge asset to us, is just kind of digging into the community. And when I
Mhm.
first got into real estate, I had this belief that I actually really remember this. The first time I ever made a real estate model, a pro forma, I had this fundamental belief that I didn't want to share it with anyone, because I thought, gosh, if I share this model, like everybody's going to know how we invest, and like they're going to take all our good deals. And so I was like really careful about what I said, and people would ask us how we're investing, and I would be really coy about it and wouldn't really talk about it.
Mhm.
And boy, have I changed my belief there. I've come full circle, and now it's the exact opposite. I'll tell everyone what we do. I'll frankly tell them how we do it. And what I have found is, by being really vocal about what we do, there's so much more positive to come from that than the
Mhm.
potential negative of other people kind of learning how you do things. That that's now become my belief. And so, if anybody ever wants to know anything, we do interviews like this, and we tell basically any secret we have, we'll usually divulge, and the positives from that have way outweighed the negatives.
Mhm.
So we're huge believer in just creating community, try to help people wherever we can along the way, and then good things kind of come back in return.
That's good. I once heard a quote that says that if you help enough people with their needs, eventually your needs are going to be met through that, and it adds to what you're saying.
Yeah, totally.
Um, yeah. So thank you for sharing. And you mentioned that real estate investing is something that you see as a long-term investment. There are other types of investments that we can do um, without counting real estate. Why real estate was the one that stood out to you particularly?
Yeah, I mean, to get started, to be honest, it was just the one that Nate pitched me in the car. So, it wasn't like we didn't go around saying like, well, we've got oil and gas, and then we've got
Yeah.
stocks and bonds. I mean, Nate just happened to pitch real estate. I told someone the other day that I said, you know, I could probably get pretty passionate about like toilet paper. If I
Hmm.
spend enough time on it, I would probably get passionate about it. So I think I have a bit of a personality like that, where
Uh-huh.
I like kind of digging deep on a topic. And so I don't know if it's, real estate or other things. I will say one couple things I like about real estate, and I know
Hmm.
Nate, my business partner who I talk about a lot, he often says, he has trouble investing in anything he can't really control. And
Mm.
so I think one thing we like about real estate is, the ability to actually make a difference. If you invest in Apple stock, you know, look, an Apple board is not going to call you looking for advice, right? Hey, can you really make a difference
Hmm.
um, in that asset? That's hard to say, right? Whereas, real estate, for better or worse, you can make a difference. And so I think we've been drawn to that, to the ability to, be proactive and make a difference
Hmm.
in various ways. And then even when we do passive investing, it's kind of interesting. Like even when I invest passively in projects, and that could be real estate, or I invested in a wedding venue. If anyone happens to know Joshua Callan, we've had him in a couple of our meetups. Just an amazing entrepreneur, and he builds out these wedding venues, which are very different from what I'm an expert in, or not an expert, I'm knowledgeable in, I guess. And yet, even though we invest passively, we're still involved in any way we can. So I talk to Josh at least once a month about various topics. My wife happens to be a bit of a social media expert, and so she's actually been able to help him a lot on the social media side. So
Hmm.
one we think is that, like, if we're going to invest in a project, we like to add value wherever we can, and feel like we're somewhat connected to the project, even if we're passively investing. And so I think that's a little different than stocks or bonds, or
Hmm.
other projects where you can't really kind of be the, I don't know, your energy level can't really impact necessarily the gains on the project. Something
Yes.
bad goes wrong, and you can't just spend a weekend trying to fix it, I guess. So
Hmm. And you need a team for real estate too. And as you're adding value to people, you're networking and stuff, you're able to build that team and connect with others. And with other types of investments, you can do that, but you are perhaps limited into the capacity that you can invest.
Yeah, I think that's right. I want to make a point on I hear a lot of people, I meet a lot of people at meetups, and the conversation will go like this. There'll be someone I've never seen before, and I'll say, "Hey, what are you doing? Like, what's your, how are you going to invest, or what are you doing in real estate?" And I don't know if someone's out like coaching this, but I hear the same thing over and over. They'll shake my hand and say, "Well, I haven't invested yet, but I'm building my team. I'm building my team." And then I never see the person ever again.
Yeah.
Right? Like they're just gone. I don't know where they went. And I don't know if there's someone out there coaching, like you should go to one meetup and shake everyone's hand and say you're building a team and then never come back again. But I bring up that point because I guess I fundamentally believe that people will talk a lot about building a team. So we actually don't believe in building a team. We believe in building really solid long-term relationships. And actually, I would rather less than more. And here's kind of my fundamental belief on this in real estate. Rather than knowing 50 people, right, and feeling like I can check the box on every single thing I might need in real estate, that's like really hard to do and really hard to maintain a really awesome relationship with all those folks. What I've always tried to do is say like, okay, I'm going to build like 5 to 10 long-lasting, meaningful relationships. People who I really trust, that I would like invite to my wedding. That level of trust. And then as you move in real estate, those people kind of keep going like higher up in their level and skill and right. And I found that those people, whenever I need someone in that group can refer me someone. And I found that to be a way more beneficial way of building a long-lasting business, because maybe that just fits my personality. Like maybe I'm just not like a 1 to 50. I'm more like a, like that kind of like close-knit group. But like a lot about real estate is being able to trust people. And that sounds like so cliche, but I mean, I think about all the deals we've done where we've been burnt. Somewhere along that deal, someone has not like broken a level of trust in that project, or, and that could be a contractor, that could be a business partner in the deal, that could be a bank, but somewhere along each of those things that didn't go well, or the seller, right? And I think about all the things we did that were like huge successes. And I think the people involved in those, we were able to trust and we leaned on those relationships. So I guess I would just, for what it's worth, I would just challenge I think when people hear that I go out on meetups, they think that like, I'm just out there trying to like get to know 1,000 people. And really what I'm trying to do is like find the like 10 to 15 most meaningful people I can who kind of share our same ethos and way of thinking and way of doing business. And that has led to, I think, a ton of success for us, as opposed to this kind of just like checking the box, like, oh, I need an insurance guy. Like, great, box is checked. As if like, if you check enough boxes, you're going to be a millionaire in real estate. Like, that's just not. I don't find that to actually be the way to build success. So.
No, that's good, and that's important for new and seasoned investors as they're going through this journey, because things change, people change, and you want to make sure that those core people in your team are building and going the same direction that you're headed. And we also have different seasons in lives, especially if you relocate or you have kids, or change your investment criteria.
I've been working on something for like a post for Facebook where, and I'm not a designer, so I asked my wife to actually design it. But I had this like belief that like people think real estate investing is just like this straight line up and to the right. Right. And like, it's not the reality, right? The reality is things happen along the way. And as things change, you're going to lean on different people in different ways. And so I think that, that's ultimately where the trust thing comes in. Those long lasting relationships are just way more sustainable. So.
That's good. So let's talk about the big elephant in the room, COVID-19. Has it been something that I mean, you guys manage what, 4,000 or so many units
Yeah,
in
so it's
SlateHouse?
so our private management company is called SlateHouse. We manage 4,000 units across 4 states.
Mm-hmm.
It's basically a mid-Atlantic company, so Pennsylvania, New Jersey, Maryland, Virginia. And it's really interesting. If you look at our rent collected, let's just take February, March, April, May, it is shockingly flat. I mean, maybe April, and we're not quite done with May here yet, but April might have been down like 1%. So shockingly flat. Now, how we got there is really interesting. And obviously we're still early in this pandemic, right? I mean,
Yeah.
in some ways we're past the peak, but the economic impacts this thing are going to go on for years, right? And just different hitting different people in different stages, different points. So I'm quick to say we're early on, but a couple of just trends that we're finding. So one is A and B class definitely impacted less than C and D class, at least so far, right? I'd say in general, our A and B class properties, you wouldn't even know anything's going on. Number two, a major housing shortage right now. By the way, I don't know anyone who's talking about this, but there is it's about to be a housing crisis. Huge housing shortage. We are right now sitting at 50% the marketed units that we were just 4 months ago. So if you look at our entire portfolio, the number of units that we have listed for rent is 50% the volume of 4 months ago. That makes no sense. If anything, seasonality is actually the opposite. So normally we actually see more units because there's more turnover in the summer. So that makes zero sense. And 50% is a big number. Like, we're not talking 5%. So if we're seeing 50%, we think that's somewhat indicative of the marketplace. I've seen that number thrown around in a few different points, but I've heard no one talking about this. This is a major item to discuss. And what's that mean for investors is just a shortage of supply. It means that units are renting faster than ever, which is really surprising. We thought we would see it being really hard to rent. Relying on technology more important than ever. So we're seeing the real estate companies who are not very tech savvy are just frankly in big trouble right now. We use digital lock boxes, so people can do self showings without us even being there. All of our units, we have our prime managers post a walkthrough video of the property as well as pictures. And so what we're trying to create is this ability to literally rent a unit without ever touching us, right? Without ever coming within, forget about 5 feet, without coming within 100 feet of us, right? And so I would say about 1 in 3 of our units are being rented sight unseen, nothing more than pictures and videos. And then the other 2/3, most of those are being done by digital lock boxes when they can, or other means of using tech to get people kind of in and out of the units. So to me, that's shocking, is major housing shortage, and that's kind of leaning into investors. Okay, now to get to the negative impact of COVID, no question about it, it's been units that are in a turnaround process. So, and I would, I think my one big caution is, if you're looking to buy something that's going to be in a turnaround state, I'm not saying don't buy it, but I would push out that start date a little bit right now. And when I say turnaround, I don't mean like fixing some floors. I mean, like, we've got units in there that are rented that we are going to have to evict some people, probably some tenants not paying rent, or we want to like drastically increase rents. We're going to turn over the units. And that's just because, and I mean, this isn't shocking to anyone, but evicting right now is basically ground to a halt for the last couple of months. And, I think we're starting to see some court dates get scheduled, but I think that, it's going to be another 2 to 3 months before any kind of a normal eviction timeline. So where we're seeing people get really stuck is where they bought, and it's not their fault, it's completely bad luck, but like in January, they bought a 15, 20 unit apartment building that needed 10 of the units evicted over the next 60 days. And they got through a couple of evictions, but some of them weren't, actually locked out yet. And now those evictions that would have taken 2 months are now 6 months in, and still no sign of ending. Right. So I think, that's where we're seeing the biggest impact. I would say by and large, we're seeing people who did invest in nice things for the units are being rewarded handsomely for that. You know, I heard the quote, people are valuing their home more than ever. I think that's probably true, right? And so, you know, I think that's being rewarded. We're actually seeing maintenance costs plummet, you know, so, you know.
Really? Why is that? What's causing that? Huh.
Well, I mean, you know, just, I mean, I guess go back to just the absolute most practical thing there is really two things, right? So one driver is, you know, that tenant who had that door that wasn't closing properly, right, in their bedroom, they're just going to fix it themselves now, right? Like, or they just won't get it fixed, right?
Yeah.
You know, so we're just seeing more like just, you know, kind of less of the squeaky wheel tenant. And I'm not like judging either or, right? I'm just saying that's happening less. Tenants just don't want us in their apartments in 2020. So therefore, we're seeing maintenance costs come down. The other reason is just we're just seeing less turnover. I mean, in a world where you don't have evictions, you have less, frankly, you just have less turnover of units. And so with that also decreases maintenance costs. And I'm not talking like 5%. I'm saying, I mean upwards of like 35% decrease in maintenance costs at least, across just what we can see. And I think we'd be indicative of the larger marketplace, but you know, I need some more data points there. But so those are some things we're seeing. We are seeing that, and I'd say, like, as you know, the next logical question here is, what's it look like going forward? I think there's no question there's going to be different regional approaches. I don't want to take a political stance one way or the other. I will say it's not shocking that we are seeing more conservative, landlord-friendly areas, and I don't mean states. I literally mean, you know, by the township, are you know, moving forward with things faster, like evictions. You know, the more tenant-friendly areas, again, not super shocking here. We're going to probably see that get pushed out later. You know, I mean, as just some comparison, in York County, we're actually starting to see lockouts get scheduled. And again, look, I know evictions are a hot topic for anyone in, you know, in the world, right? But we are starting to see that. You know, whereas I look at places like New Jersey, Philly, Baltimore, which are in general more kind of tenant leaning, they're not even talking about it yet, right? And so I think we're looking at probably a couple months there. So I think we are going to see a bit of, and then that's on the political side. Obviously, also the how hard an area was hit by COVID. We look at our Virginia territory, by the way, which, you know, it hit much less hard, much less impactful, and much lower numbers. So, you know, we'd expect things to kind of jump up quicker, and also just lower unemployment rates, things like that. But I guess and I know I've covered a lot here, but I hope that this is helpful because we do see a lot of data. I think that the two most shocking things to me that maybe people can take away is just major housing shortage. I mean, I don't know how else to say it. There is a major lack of supply right now. Major housing shortage.
In all the states that you guys manage.
Everywhere, across the board, major housing shortage. And it's not that demand is higher, demand's lower. It's just that supply is so much lower, and demand has not decreased as fast as supply has. So major housing shortage. And then just frankly, you know, the sky hasn't fallen when it comes to rent collections. And so I think that's a really good story overall for the space. Even our commercial tenants, by and large, are paying. I think obviously the CARES Act is really helping. But, you know, I mean, we manage some, like right now I'm sitting in our headquarters, which is a co-working space. And, you know, now we have a very diverse pool of tenants here. We have people who have, you know, 4 to 5 offices, and then we have people who are individual members. But even our revenues in the co-working side, which you would think would be decimated. I mean, if you knew nothing, you would think like owning a co-working right now would be a disaster. Honestly, our rent collection's down about 5 to 10%, which, you know, frankly, I'll say I'd take that in the co-working space. And again, I think the CARES Act is helping that. Yeah. Also a diverse pool of different people who rent different spaces. So I think that's overall a good story. Is things
Hmm.
aren't nearly as bad as you might think in the COVID space.
Yeah, and it seems like um, things are moving now, where some areas that were on the red are now being they're going to be changing to the yellow phase.
Yeah, I think
Um,
that's right. I think the one thing I've really learned about this is every town is different how they're reacting, and you
hmm
really need to have a pulse of what is going on in that town, or have a
hmm
connection piece with your property manager there to just really understand
hmm
the nuances of how things are changing, and they change every week. I mean,
Yeah.
it's
Cool.
the rule book changes every week, and I think just kind of staying attuned to that. We've tried to actually not watch any national media. It's kind of has nothing to do with really. I mean, regardless of whether you're a CNN fan or Fox News, either one doesn't help me much in my real estate investing. Like, I find
Yeah.
I'm really attuned to actually the local newspaper in these different towns, the local governors, the local
hmm
mayors,
hmm
the local judges. What's coming out of those areas are way more impactful than these national, because the national folks are going to where the story is, and the story today is in Brazil. Well, that doesn't impact. It has literally nothing to do with
hmm
Virginia Beach, Virginia, right? And
Yeah.
so I think just trying to stay away from kind of the media storm, again, regardless of what side you like or anything like that, and trying to be
hmm
more attuned to like what's the reality in my area, I think is really helpful
hmm
to making good decisions of where to go next.
Yeah. Especially since, I mean, we can be in a city and then drive a few minutes, and now you're in the suburbs, and the way you approach things in those areas are a lot different. Um, yeah.
I hosted a call with someone from North Carolina, really smart dude, and somebody else was on the call from New Jersey, and asked the person from North Carolina, what are your thoughts on COVID? The guy said, it's a complete overreaction. Haven't seen any impact on my business.
Oh, I was
Everyone's
here for
still
that one. Yeah.
right. And then and on the same time, comments are coming in from New Jersey. Who
Yeah.
the F is this guy? This guy's crazy.
Yeah.
Like, and so I think that's indicative of what's happening. And I think on the real estate side, just being really attuned to where you're investing. The beach town is very different from Philadelphia, is very different from the small town, and very different from Baltimore. Just understanding these differences in areas, I think, is like super, super important. It's only gonna change more, right? Because
hmm
as
Yeah.
these numbers keep changing. So
Yeah. Thank you. Yeah. It's interesting to hear your thoughts on it, especially since you mentioned, yeah, you guys analyze so many properties, and you're coming across so much information um, that can prove or disprove what we're hearing in the news, and just seeing all of that is good. Yeah.
cool.
So to change things a little bit here, I'm gonna throw you a little fastball. What has been or curveball, as you want,
I do like
your
baseball.
favorite investment that you have bought
Yeah. So
or seen?
favorite investment. It's like I guess it'd be like saying what's your favorite child or something. It's hard to differentiate, a favorite. I did, so I've got a couple, and I know you're asking for one. I'm gonna give you a couple,
Okay.
but I think it's a couple of them kind of tell different stories of why we really liked them. The first is I do have a fondness for my first ever property I ever bought, and one reason why I really like that, it's performed really well, but it was also potentially the most simple property I ever bought, and it was just a single family home 2 blocks from Lancaster General in Lancaster, PA, which is the local hospital. And I think we paid $90K for it, and it rented for like $950 a month. We bought it. I mean, we knew nothing about real estate, so we.
Mhm.
We bought it the most traditional way you possibly can. We put 20% down. We had an inspection. We had a real estate agent who knew nothing about investing, literally nothing, who showed us the property, and even though all of that happened, and in the first 4 to 5 years, we basically made no cash flow on the property. If all you were looking at was cash flow, which is what we were hoping for, it made zero. It basically broke even for the course of 5 to 6 years. But what's crazy about that investment is it's now worth like 165K, and it's boring. I mean, like, it doesn't make for a great story. It doesn't make for a good Facebook post. It is boring as all get out, and yet what an amazing investment it's been. And so I guess the punchline for that is that sometimes boring can actually work out really well. And sometimes over the years, I find that when we complicate something too much, sometimes it can backfire. Sometimes just slow and simple and boring can be really successul. So I like that one.
Yeah.
Another deal I did that I really like is we bought so we did a syndication where we actually raised $2 million, but we did it very unusually. We did it a blind syndication. So we actually didn't tell the investors, because we didn't know. We didn't have one asset. Usually when you do a syndication, you go out and you raise money and you're gonna go buy one big multifamily building or one big commercial space for 10 million or whatever. So in this case, we said, hey, look, we're actually gonna go buy small to medium-sized buildings and a whole bunch of them, and we're going to diversify the syndication over a big area. And because of that, we actually don't know where we're going to invest, but we're going to kind of call money as we need it. And golly, once you know it, people actually said, all right, that sounds like a pretty good idea. I like the idea of diversification in a syndication. So we did that, and so I was hosting a meetup, and I was doing what I always tell people to do: tell people like what you're looking for. And so I said, we're doing the syndication. I kind of explained how we did it, and I said, we're looking to buy basically 4 to like 20 unit buildings at that time across Central PA. And wouldn't you know it, that night I get on Facebook and that says, hey, I've got a 15 unit building in Elizabethtown, Pennsylvania, and it's off market. I've got the owner. He wants to sell, and he hasn't put on the market before, and he's interested in selling for $500K. Would you be interested? Now, look, I mean, and it's a good building, in good shape. It's all rented. That building is worth $650 all day, right?
So it was a turnkey.
Yeah, it was ready to go. I mean, we've been able to increase rent some by actually turning some of the 1 bedrooms into 2 and stuff like that. But by and large, it was ready to go. And so I was like, I got real excited, and I said yes. I said I know the area. I'm happy to compensate you for this. I said, what are you looking for in kind of compensation as part of this deal? He said, oh man, that's tough. He said, look, I can't take this down myself. I'm relatively new to wholesaling. If you could give me $2,000, that would be amazing. He said, I know it's a big ask, but and I said, look, I'll make it 3 and we'll, call it a deal. And so I was able to buy the property. What we actually did was we actually bought it in cash from the syndication, paid essentially the wholesaler, who never even, all he did was intro me. I mean, it's really a bird dog more than anything else that, but he's thrilled. I mean, him and his wife hugged me when I gave them the money. They were so thrilled that we would be able to give them the money. So they're thrilled. The seller hugged me at closing. He bought it for like $150K 30 years ago or something. So he was thrilled. He's able to retire now. And then for our syndication, we bought an asset that we were basically able to then refinance the asset and pull out all the money we put in to the property, right? I mean, we waited like 6 to 12 months, so we had everything. The rent's a little bit higher. So the investors in the syndication are also excited. So I don't know. I love that story of what's possible when you just tell people what you're trying to do, and it's not really about screwing anyone. It's more about like everybody there won. Everybody walked away thrilled. Everybody kind of got what they want. So I kind of like that. I like that story.
That's good. Thank you for sharing. And it also goes back to what we were initially talking about when we started. One of the benefits of investing in real estate is that there's also appreciation. So over time, your property, its value is going to increase because of inflation and other factors around the area where you have that investment.
Yeah,
That's personally
100%.
why I like real
Yeah,
estate.
no, 100%. I think
Yeah,
sometimes
and
people take
buying.
that for granted. They're
Hmm.
they're looking for that immediate cash flow. And
Mm,
I think that's kind of a miss. I think you gotta be
yeah.
patient. So
Hmm. If you don't have patience, it will teach you. Yeah,
yeah, no question about it.
through the
Uh,
process. Yeah.
Now I'll
Um,
tell you one more quick story here. So it's interesting. We just bought a property. It's probably 2 blocks from the first property we ever bought. I didn't buy
mhm,
anything for the last 2 years. The market was just too crazy.
mhm,
We didn't feel like it made sense for us to buy anything, but
mhm.
we um, we bought a single family home, and we got it. It was just actually a client of ours just wanted to liquidate some assets, and shot us an email and said, hey, do you know anyone who might want to buy a couple of these things? And I looked at the one and said, yeah, I actually know someone. I think we'd probably buy that for you, and we could probably. So we were able to. He wanted cash in a couple of weeks. We were able to accomplish that. We bought it for about 92K. We put in a new. It needed a new gas furnace, and it had the original hardwood floors were actually covered by really gross carpet that was kind of like raggedy. So we tore the carpet up, and it's actually gonna be done hopefully at the end of this week. But we put in, all in, we probably put like 8K into it to get the floors refinished, to get the new
Okay.
gas furnace put in. Um, but what's interesting is that property is now, we think it's probably worth about 113, 114, 115, something like that. So, I think one thing we've really learned about real estate is if you're able to, I mean, getting traditional financing at the point of sale is great. But if you can get an asset closed without putting long-term financing on it, either you can pay cash for it, or you use private lending or a syndication or wherever that money's coming from, if you
Or
can
hard
kind of get
money.
it closed, and then you can later refi that, which is what we're going to do. We'll get it rented, and then we'll refi it out. We're going to get not. I don't. I think some people think you have to get all your money out using that strategy. That we don't fundamentally believe that. So I think, if
Hmm.
I'm able to refi that property and be all in it for $4,000, like that's a huge win, right? It's not like
Yeah.
zero or nothing. Like some people are like, oh wow, I need to get all my money back. That's not reality, right? If I'm all in that
Hmm.
property for $4,000 when I'm all done, I think that's a huge win. And
Hmm.
so it's just kind of interesting how we've come a bit full circle, that
Yeah.
we still like that B class property, but if we can buy it and put some money into it and then refi, that seems to be kind of what we prefer to do now.
Hmm.
But that boring single family home B class is really attractive. And then just one more point I'll make, which is, you know, over the years, we started moving towards buying things more and more in LLCs, which is
Okay.
kind of like conventional wisdom, right? Buying an LLC, get legal protection.
Hmm.
I think one thing we started to do more of is, especially right now where interest rates are so low, is not be afraid to actually put a 30-year loan in place, actually buy it in your own name, and
Interest rates are super low right now.
that's right, that's right. So, you know, if you think about it, let's say you do a 30-year loan, you know, I don't know, your interest on that's going to be like, let's just say it's like 3.8 or something like that, right?
Hmm.
The amount of money that you're going to save over time, as opposed to doing a commercial loan where it's a 5-year fixed at like, 4.2 or 4.5 or whatever. But then, years 6 to 10, what's it going to be? And that's the great unknown. And who knows what those numbers are? But
Hmm.
I just think that's really appealing to lock in that 30-year loan. And if you're nervous about risk, go out, work with a good insurance company, get an umbrella loan over top of it or something.
Hmm.
But I think there's a lot of, by the way, get good property insurance, right? Work with an insurance agent who actually understands investing. So I think there's a lot of power to that approach.
Hmm.
And, now look, when you get north of like 4 units, you can't do that. But for those 1 to 4 units up to like 10, properties in your own name, there's a lot of power to buying an investment property in your own name right now, just because with interest rates where they are, to lock it in for 30 years is really powerful.
That's good. Thank you for sharing. Um, wow. Yeah, you gave us a lot to think about. Um,
Yeah, hopefully it
so I
wasn't too
have,
fast, by the way.
Yes.
Sometimes I get rolling, and then
That's what happens when you're passionate about something. You lose track of time.
yeah,
Yeah. So I have two last questions for you.
cool.
One is, in addition to property management, what else does Chad do? And then how do you manage your time?
Yeah, so I guess I'll kind of break up the what do I do into real estate and then non-real
Mhm,
estate. Um, and I'll caveat by saying I like working, so I don't find these things to all be work, I guess. But so
mhm,
yeah, so we do investing. We own a private management company. We operate a couple different co-working spaces called the Hive in a few different areas. We really got spent a lot more time actually on our insurance business. So we co-founded an insurance company called Red Rabbit Insurance.
mhm,
The premise there is, and by the way, I knew nothing about insurance about 2 years ago, but I knew that there was a huge problem that most insurance agents didn't understand investing. And so we met
mhm,
what we think is the most knowledgeable insurance agent for investors. His name is
mhm.
Ryan Dalbert. And so it's called Red Rabbit Insurance, and become really passionate about that and kind of growing that and helping investors really just find better priced, but also better products for their investments. We saved a ton of money by Ryan kind of helping us out. So spent a lot of
I
time on the investment.
I I
Go ahead.
used it myself. Sorry, and I also
Okay.
saved. Yep.
Yeah. So we were shocked. And it's
Mhm.
interesting when I see people who reach out, who end up going with Red Rabbit. I get like I'll know someone for like 6 years, and I'll get like the biggest hug ever, and I'm like, what? And they're like, oh man, you just saved me $500. You're the best. Like God,
Yeah.
I've known you for a long time. Like it's kind of sad that like now I get a good reaction, but yeah, so I spent a lot of time on that. We were spending some time working in a group on some technology um, surrounding making it easier to file evictions in the state of Pennsylvania,
Mm,
which sounds like super, super ridiculous, but it's actually like a really hard process and very manual. And so we happened to kind of join a team that also agreed it didn't make any sense. And so kind of trying to turn that whole process into a much more fluid online path to filing evictions. So
mhm.
it's kind of a random thing that we kind of passionate about. And then,
Yeah.
I mean, outside of real estate, so I host the Real Estate Hackers podcast. If folks
Mhm,
are into kind of the convergence of real estate and tech, Real Estate Hackers is the name. And then outside real estate, so I've got a 4-year-old daughter who is very energetic. Um, so right now we're working on reading Alice in Wonderland, which
mm,
it's weird. I've never actually read the book. I thought it was going to be like this really fun book for like a 4-year-old. It turns out it's like a really crazy story. I don't know if anyone's ever read it before, but yeah, so working through
Yeah.
Alice in Wonderland with my daughter, and I
Okay.
am into sports, so I watch a lot of sports kind of in my free time.
Awesome. And how do you manage all of that? Do you allocate your time to spend in business or and then in family? Or?
Yeah, I mean, so I guess like one thing I would say, and this is me a little tricky, but I I find real estate to be enjoyable.
Mhm,
So I guess the same way someone would be like, "Hey, do you want to play a game of chess?" Or like,
mhm,
"Do you want to play a game of cards?" Like, I find what I do to be fun, and I guess if there's like one thing maybe people take from this today, it's
mhm,
like find something that doesn't feel like work every day.
mm,
So because of that, I spend a lot of time doing real estate related activities. I hate to even call it work because it doesn't feel like work in business. It's kind of what I do, and
mhm,
so like tonight, I'm kind of going here till 8 o'clock, and so I guess what I'm trying to, and then I kind of like do that, and then I do like family stuff. I
mhm,
guess like what I don't do is I don't have like a lot of like hobbies, or I
mhm.
don't watch like I don't even know what's on Netflix, right? What's a Netflix show that's on right now? Like I probably couldn't even tell you. Like I don't.
Tiger the King.
Tiger the King, yeah.
Yeah.
Like I'm not a Netflix guy, so I don't know the latest but that's because
Mhm,
like if what's the show? my wife watches some show about housewives or something. I don't know. You guys probably even know what it is. I don't even know what it is. All I know is it's a bunch of women yelling at each other. It looks terrible to me. I don't know why she enjoys watching it. So when she watches that, I'm like on the computer looking at like the latest, pro forma or whatever. And we're both really happy. I don't know if that answers your question, but I find myself, because I enjoy something that happens to also create money and I think do good things for others. I find that to be like a really good sweet spot, and I encourage people to try to find that. Like, work shouldn't suck, and if it does, there's like a problem. And so hopefully, I hope people can kind of find something they're passionate about, and it just so happens for me, it's real estate investing, and by the way, within real estate, there's all sorts of different stuff, right? So like, I find some people are really, they'll like. So we have a lot of clients, and we'll have clients sometimes who they'll buy like a property, and like really like bad luck happens. And bad luck happens in real estate, right? So they'll buy a property, and like the tenants need to get evicted, and then maybe like all of a sudden like the roof collapses, and then like the sewer clogs, and it's like, wow, that was really horrible. And the owners will sometimes say things like, I guess real estate's not for me. Right. And it's like, well, no, you just got really unlucky. Like, that doesn't mean real estate's not for you. And I think that, like, I guess what I'm trying to say is that even within real estate, there's different pockets of real estate. And I think like finding the pocket of real estate that you enjoy is like really important. And so if you like, collaborating with people, then like you probably shouldn't invest by yourself, because you're going to like hate that. Like, go find a couple people to invest in real estate with, right? If you find you're really good at, like, I don't know, raising money, then like go, like Matt Faircloth is a very good friend of mine, an investor out of New Jersey. He's decided he's going to spend the rest of his life just raising money. That's all he's going to do. He's going to just raise money and put it into various projects. He's not going to be the asset manager. He's not interested in that. He used to run a property management company. Actually, we now manage a lot of his properties. He doesn't want to manage properties. He doesn't want to be the asset manager. He doesn't want to find deals. All he wants to do is just go raise money and then put it into place with people that he really trusts. And so I think it's really interesting, right? Like, here's Matt, who's like one of our good friends, who does something so different from what I do, and so different from what you do, and different from other people on the call. And so I think that's like super crucial, is like, gosh, if you're in real estate right now and you're like miserable, then figure out how to start spending more time on things you like doing. And maybe like find other people to do the things you don't like to do. And just to use Matt as that perfect example, like Matt was like running his own, he was like managing 100 units. And so he was basically running a 100-unit property management company, and he was raising money, and he was the asset manager, and he was finding the deals. And he looked across all those things and was like, I hate doing a lot of this stuff. I hate managing properties. I hate being the asset manager. But you know what? Golly, I really like going out and raise money. And so then he found a really good property manager, and not just one, like 3 or 4 different management companies. And then he actually even found an asset manager. So he doesn't even asset manage his deals. He actually ties in someone into the equity side of his deal. So he'll do like a deal, and if he's getting 20% GP on the multifamily, he'll take that 20% and break it into, maybe he'll give 2% to the person who's going to asset manage the asset long term, which I think is just really interesting, because like people would say, like, why would you give up equity? Well, if you don't like being the asset manager and you don't like being the private manager, then you're not going to like being in real estate. So instead, he's given up a little bit of the pie, so to speak. But because of that, he's now spending all his time doing things he loves to do, which, if you're doing things you love to do, I mean, I don't even differentiate. It's like yesterday. I mean, obviously yesterday was like a holiday, but I did real estate for like 7 hours yesterday or something. I don't know. And I was really pumped. Like, I was going through a multifamily pro forma and figured out a way, and like the IRR is going to be 17% on this like new family construction deal that I'm really psyched we're doing with the Vanguard guys. And it was like awesome. And it didn't feel like work. Yeah, like if I would have had to do something in real estate, like I'm not like mechanical. So if I had to be like putting up drywall all day, it's like Nate, the business partner at SlateHouse.
Yeah.
He spent the weekend rehabbing his master his like the master bath in his own personal house.
Mhm.
I can't think of a worse thing to do. Like that would have been horrible. If you could have paid me 10 grand, I would not have any desire to redesign a master bathroom. And so anyway, I know it's a long story, but I think the point I'm trying to get to is a lesson that Matt taught us, which was if you really don't like doing something, over time, you darn well better find someone who can fill that gap. Because if not, you're going to kind of half-ass that because you're never going to want to do it, and you're going to hate your life, so you're going to spend less time doing it. And if you can find those people who actually like doing it, or those business partners who kind of complement you, you can go so much further in real estate. And so I know that all sounds kind of cliche, but I think that's like, it's really powerful, and we've seen it work, and almost all of the successful folks we know have really rock solid partners, either business partners or partnerships they found to kind of complement the things that they're not as good at along the way.
Wow, tremendous value. Thank you. Yeah,
Cool, man.
thank you.
Any
So,
questions from the group?
yeah, let's open it up to the group members. If you want to unmute yourselves.
I have questions.
Oh, more than one. Oh boy.
Let's.
Oh yeah, definitely.
Sure.
So no, I mean I only have two, but they're related. I noticed that you mentioned that you have family, and so my question was, when you started real estate, did you already have a family? Did you start part-time, or this was a full-time? Did you leave your job? And so the second question would be, how does real estate can help supporting a family if you don't have a permanent job? If you dedicate your whole life to real estate.
Yeah, let's talk through that. So so first off, did I have a family? So I had a wife, and we didn't have kids yet. I don't even know if we were married yet. I don't think we were married. So I had a girlfriend, I guess. But yeah, so a couple things. One, this is in no order. So first off, I think it's really important that your significant other be supportive of you in real estate. And so I will forever give Ashley, my wife, a ton of credit. I mean, like tonight, I hadn't been home all day. And I didn't even tell her I was going to do this tonight. So I told her an hour ago, hey, sorry, I'm not going to be home till 8:30. And the response was good luck, and I just think that's man, that's really awesome. And so I'm really lucky there. And I would say so first off, try to find, or not try to find the wrong word, because if you're already married, you've already found the person. But I think being in lockstep there with your significant other is really important. So that's number one. Number two, I would say, so I think the second point is actually equally important. I think that having a job as you build a real estate portfolio, a real estate business, a real estate side hustle, a real estate whatever, is really, really powerful because, man, there's so many reasons. First off, it allows you to really think long term, as opposed to I need to eke out money, right now, right? And so being able to kind of plan for the long term, and that first investment I made no money from that for 5 years. If I was in full-time real estate, that would be a disaster of a deal, right? So that's the first point, is you're able to think more long term, and you always make better decisions when you think long term. The second point is, look, banks are going to love you so much more if you're an investor while you have a full-time job. And so I was able to build up the portfolio and get great rates, never have to worry about financing. Banks loved us. If we made a mistake along the way, I knew I knew I'd be able to, pay for food at night for the family. So I think that makes a lot of sense. And I actually even think that sometimes people will say should I quit my job tomorrow? I actually think that if you're debating quitting your job or not, and this is going to be a bit controversial, but it's just my own opinion. If you're debating quitting your job or not, I actually think you should quit your job, but you should wait like 6 more months, right?
Mhm.
So like if you're like not sure, when you're always gonna be not sure, but like
Mhm.
quit your job, but just like put a plan in place and quit your job in 6 months or 9 months. And it's a bit arbitrary,
Mhm.
right? But I think that's like a really good plan. You think you say like, okay, like so when I was the point when I was working full time, I was basically doing 2 jobs. So I'd work during the day and then I do real estate at night or the weekends. Or sometimes it started becoming real estate during the day job, which is like, that's like totally okay. That'll start happening.
Mhm.
But then at some point I said like, okay, I'm on the fence about quitting. I'm going to quit. I'm going to leave, but I'm going to leave in like 9 months. And now it's like pedal to the metal. Like I'm all in and I was like really cranking and able to like really go hard at it. And then got to a point where when I left, I wasn't like freaking out. And even when, because I'll be honest, when I left my job, the next 6 months were actually not a great 6 months for us investment wise. We just made a couple mistakes. We bought a couple of properties we probably shouldn't have.
Mhm.
And so, but having waited a little bit longer, man, I had some money set aside so that, there wasn't this like rock bottom event. So.
Mhm.
So when you started, you didn't have the cash. You have like you have to get a loan, or you actually use your own money.
So when I started, it was a combination of both. So we had some money set aside, but we also got loans. So we did both. And then as we went further, we started to buy things straight up in cash, but like cheap things. I mean, we buy like a $15,000 property or something. It's honestly expensive properties, but we found that to be like really powerful was. And then just reinvesting, right? So we weren't pulling any money out of the real estate business for a long period of time because our jobs were basically paying our day-to-day income.
Awesome.
Can I ask
Awesome.
a question quick?
And yeah,
So
and then if Chad could share how people could reach you, we've run out of time here, so I'm gonna let Pardovani, and then Chad, and then we'll close from there.
All right.
Okay.
So, Chad, I like how you say like instead of 50 people, you rather have like 10 people that you can trust, and then like where you trust those people. But me, I mean, I like that. So, but me myself, I believe in unity. Like I feel like the more people I can trust, the more my business will grow. So that means like if I have 50 people, so it will help me actually expand my building even all over the state or even the world. But if you have like maybe just 10 people, it
Limited.
might not be and yeah, exactly.
Mm.
So me myself, I met someone that changed my whole life where I feel like if I can trust people within my community, like me within those people group that I trust, which is like the people at church, you know what I mean? Like which is those daughters and sisters. So I feel like if I can trust those people, you know, I can have more people that I can trust where I can expand my business to what I want to do. So how do you see that? Like, because I believe in human together strength. So a lot of strength. So that's why I believe. So
Yeah.
I don't know how can you respond to that.
Yeah. I mean, so look, I think everyone's got different personalities. I haven't figured out a way personally to find 50 people that I like. I mean, I say trust. I mean, like, if I died and I wanted Izzy, my daughter, to like go live with someone for the next 10 years, I'd be like, yes, you will be in great shape. I mean, like not just, like whatever it takes, like has your back. Or like, here's another, like how well you trust someone. Like if I gave them access to my bank account, I unequivocally know, like I would have no qualms giving them my bank card and password for the next 2 years because I unequivocally know they're not going to like steal my money. I have found that like that level of trust is just hard for me to generate that with 50. And what I have found is that with like, and the numbers have been arbitrary, but that level of trust with like 5 to 10, then those people have that level of trust with 5 to 10. And therefore my network is actually like duplicated. So it ends up being more like 100 you know, but it's kind of that. And maybe you actually have that, you don't even realize it. Like maybe someone at the church actually introduced you to some people. Well, that counts, right? Because now that person is kind of your bridge into that person, and that person says, hey, you can trust this person. Like, this is my brother, right? Or my mom, or you know, whatever. We've known each other forever. Anyways, that's the concept. I don't know, that
Awesome.
I've found is and I just want to make one more point. And that is just, I guess what I'm really trying to say is I'm just so I don't like the person who just runs around the meetup shaking 100 hands. I just hate that, because there's just no value. Like, that's not networking. Like, that's bullshit. And people think it's networking, and it's not. Like, it's just, you're just shaking hands. But what, like, you leave there and it's like, I'll be like, so who'd you meet? Like, oh, I met everybody. Well, no, you actually met nobody. Like, you built no relationships out of there. So that's my point there is, sometimes less is more, I guess. And sometimes you gotta shake a lot of hands to find those relationships. But I think, you know, when I this is what I'll close with. When I go to an event for real estate, and we go to a lot of events, my goal is one person. I want to leave. If I leave there that with some connection with one person, I'm thrilled. So
Substance. So how can people stay connected with you, Chad, if they want to hear what you're doing or learn more about SlateHouse or Red Robin?
Yeah, totally. So my email is chad@slatehousegroup.com. I'll do just so you can see it. I'll make it really easy. I'll type it in here in the so there's my email, and so you can just email me there if you ever want to talk. Our podcast is called Real Estate Hackers, and as soon as COVID goes away, we will be holding an awesome conference. You can learn more about that at realestatehackers.com. And then on the insurance front, it's just redrabbitinsurance.com. And honestly, it's funny. You'll come at us, and I guarantee one or two people will like go there for a quote and be like, dude, like, Chad had a lot to say, and a lot of that was like BS.
I'm already on it. I already checked it out.
But like, hey man, he saved me $1,000 a year. So that dude's pretty cool.
Yeah.
So and there's nothing weird about it. It's all my insurance is through there. We had a whole property burned down and got good coverage. So yeah, that's
awesome.
The gist. And if you're into Instagram, I don't really do Instagram, but Real Estate Hackers is our handle, where we try to post things that we think are cool whenever we think of it. So
awesome. Well, again, thank you for your time, and thank you everybody for joining. And
yeah, man, thanks so much for having me. This is really cool you're doing this.
Yeah. Hope you have a nice day.
See you, buddy. Thanks for joining, everybody.
See you all.